Google McDougal. Yes, Google McDougal. I went ahead and did it. So added how many shares? It was around 444 shares of Google. A little less than a $70,000 move. I'm already up about $2,000 in the position, but now I'm up a lot more because the stock's up over 5% after hours. We'll see where it trades at tomorrow. So it's a pretty quick money maker in regards to good old Google McDougal here. Okay. Now, in regards to Google, their numbers just came out here in the last hour or two. Revenue beat easily. They beat by over $1 billion, what analysts were expecting. The earnings per share, if the revenue was a boom, the earnings per share was a bang. 281 EPS they did versus $2.01 was expected. They beat by a mile. By a mile. Google McDougal. Talk about well executing, right? And this is what it looks like when you have a CEO that's focused full-time on a company. This is what it looks like, folks. Great numbers, not trash numbers, not the whole business is in decline. No. Great numbers. You come in and you smash analyst expectations and you beat even your own expectations, right? Look at the balance sheet of this company. Top 5 best balance sheet in the world. $95 billion in cash equivalents, and marketable securities for this company. Additionally, you look at long-term debt, only $10 billion. They could pay that off tomorrow and still have $85 billion chilling around, right? Total stockholder equity of Google McDougal is now up to $345 billion. Unbelievable. That's not even the best part. Look at the income statement. Oh my gosh. So they did $90.2 billion from $80.5 billion in the same quarter last year. Cost of revenues and research and development, they kept that in check very well. Sales and marketing, they actually brought that number down shockingly, which is insane to think because, with revenues going up nearly $10 billion, revenues were up on a constant currency basis. From what I saw, it looked like around 14%. 14%? Come on, man. G&A, general administrative, right, was up for the company. But once again, it's a very small number compared to how much revenue was up. So if you look, income from operations went to $30.6 billion from $25.4 billion. Jeez, that's what I'm talking about. Other income, oh my gosh, a shocking $11 billion. Income before income taxes, $41 billion versus $28 billion. Look at net income. Net income came through at $34.5 billion versus $23.6 billion in the same quarter last year. Diluted EPS came in at 281 versus 189 was expected. Banger. That's what we call an A+ income statement right there, folks. Okay. Now, when you want to break it down a little further here, look at Google Search and Other came in at $50.7 billion versus $46.1. YouTube came in at a little under $9 billion versus $8 billion in the same quarter last year. Google Network was the only thing that was down and was down, we can call it about $150 million year over year. Now, if you look a little deeper here, Google advertising in general was up about a little over $5 billion year over year. Additionally, look at Google Cloud. $12.2 billion it did for Google Cloud versus $9.5 billion in the same quarter last year. So the cloud business is growing rapidly, but that's not even the best part of the cloud business. Look at operating income loss, okay? Specifically, look at Google Cloud. Google Cloud in this same quarter last year did $900 million of operating income. This latest quarter, it did almost $2.2 billion of operating income. That's way over 100% growth in operating income on a year-over-year basis. And the revenue is not even remotely close to 100% plus, which means there's huge leverage in Google Cloud now at this point in time. So basically, whatever is coming into Google Cloud for top-line growth moving forward, so much of that dollar amount is going to make its way straight down the bottom line. They have it now at scale. When a business is at scale, that means every new dollar that comes in, a lot of it is reaching that bottom line. So phenomenal. Additionally, they just upped the dividend for all shareholders. They're now going to pay 21 cents every 3 months for every one share you own, which is a 5% increase. And that dividend, they have so much room to move that up over the next 5-10 years. It's ridiculous. Additionally, stock repurchases. They're talking about they just approved a $70 billion stock purchase program, which is huge. And Google should be buying back as many shares as they can right now. Given where the business is at, all the different business lines they have, the profits pouring in for this company quarter in and quarter out. Look Look at the total income from operations. It was $30.6 billion. Like, buy back as many shares as you possibly can right now if you're Google. Now, you guys know, if you watch my content for many years now, you know I preach what? GVD. Building out a great portfolio of growth stocks, value stocks, and dividend stocks. But every once in a while, you get to find a magical stock that is all three of those in one. It's not only a growth stock, but it's also a value and a dividend. It's rare you ever get to find that opportunity. But we have that with Google. Google has double-digit revenue growth, right? Latest quarter here was around 14%-ish on a constant currency basis. Forward P is under 20 for Google. It means it's a value stock, right? And we have a dividend coming in every quarter. It's the perfect stock. Oh my gosh. And so now you might say, okay, I know about Google search. That's great. I know they're trying to expand Gemini in the AI space, and that might be a big thing over the next 5-10 years. I know about YouTube. I know about Android. I know about Google Cloud. But is there something else really exciting about Google? Well, there is, and it doesn't get talked about too much yet. Waymo. From my understanding, Google owns around 70 to 80% roughly of Waymo. From what I understand, they've sold portions of it over time to raise money for Waymo, okay? But from my understanding, they still own around 70, 80% of whatever Waymo's worth. Now, it's also debated like how much is Waymo worth if it was a standalone company. I can tell you it's a very large number, And the reason being is Waymo, one, they're clearly the leader in the marketplace. Like, you can go in many different major cities today and go get Waymo rides with no driver inside. So the things that Tesla's talking about doing, Volkswagen's talking about doing it, all these other companies want to do this over time, but that's like in the future. Waymo's doing it today. And even another stock I own, Amazon, right? They got Zoox, which is here in Vegas. From what I always see, there's always a driver in front. Waymo has a fleet of vehicles today with no driver inside that you can take all over the city. I've done it. It took about 5 or 10 rides when I was in San Francisco a few months ago. No driver inside. Car just took me where I needed to go. That's happening today. Now, the thing you got to understand about Waymo is for Google, they don't necessarily have to make money per ride. I'm sure over time they'll make a profit for each ride they give, but that's not even the end all for Google in regards to this. You got to think bigger here. What is Google at the end of the day? The biggest advertising company in the world. That's how they make their money. So let's imagine, we're 5 years in the future, 10 years in the future. Google's got massive market share, across all major cities for Waymo. They're giving rides all over the place, right? An Uber-ish type market share. All right. What are they going to leverage then at that time? Advertising. They're going to be able to have in-car advertisements for everybody's rides. They're going to be able to send people notifications. Let's say somebody, got a ride on a Friday night to, this bar, right? Come Thursday night of the next week or Friday night, maybe they receive a notification, hey, first rounds on the house at such and such bar, a competing bar or something like that, right? Let's say they got a ride to, Texas Roadhouse, and another steakhouse says, hey, we want that customer. So they say, hey, come in on this night, get a steak, and we're going to give you a free appetizer, a free dessert or something like that. Try to steal that customer away from Texas Roadhouse. That's a place that things are going to go over time. And so that's what's important. And so Waymo, could they make money per ride over time? Sure. And that could be a successful business, but that's not even the end all. They are the biggest advertising company in the world. You've got to think bigger in regards to this, because that's where the big money's at. Who cares if you make, $1 for giving Johnny a ride down there? Like, that's cool. But you know what's cooler? Also feeding all those advertisements, making all that money off that, knowing where everybody's going. They're going to this place, this place, this place. Being able to send them relevant offers. Then you can build more commerce around that. I mean, geez, like there's so many opportunities there. So many opportunities. And then you can tie it in with Android and Android Wallet. I mean, there's a lot. There's a lot that can happen there. And so understand Google's spending all this money. They're making this big investment because this is bigger than just like we're going to make 50 cents a ride. No. This is way bigger than that. Other companies are going to be trying to just focus on like making a profit per ride. Google, they're going to be focused on other things. Okay, I can tell you that much. Now, this is a great chart by Joseph Carlson, posted this one. Waymo paid weekly driverless rides over time. And you can see it is going up rapidly. And you ain't seen nothing yet. Just wait to see this chart in 12 or 24 months from now as they expand into more and more cities and it starts to catch on more and more scale. Oh my gosh. The amount of Waymo rides that's going to start to happen here in the next 12 to 24 months while other folks are trying to get their product up to market, right? It's going to be ridiculous. And so they've got first mover advantage in a massive way, and just watch Waymo take off. So Google, the moral of the story is they have insanely great core businesses of Google search, of YouTube, right? Gemini is going to compete long-term with ChatGPT. Believe me, Google's not just going to let ChatGPT dominate for the next 10, 20 years. Like you'll see, in my opinion, Gemini slowly take more and more market share over the next several years. Just as Google did in the search. Google was not the first popular search engine. Heck no. It was Yahoo search. There was other platforms. People using MSN and stuff like that. Ask Jeeves. Like Google search got bigger over time. I think that's going to happen with Gemini. And I've been messing around with Gemini product. It's really good. It's really impressive. So, yeah. Now, what else have I been buying? Well, I bought $31,000 worth of AMD stock. This is crazy. To see AMD trading under $100 is just crazy, man. Crazy. Like, I think this is just a stock that people are going to be looking back at a few years and be like, how did we miss this one? Like, how did we miss this one? I truly believe that. And it's wild, man. It's wild because there are not that many big tech companies that I look at and I say, wow, that one might have 5x or 10x potential, right? Even I look at Adobe or Google, some of those stocks, like those are great money-making, easy stocks for me to buy that should be able to make easy money on over the next 5 years, right? But could I say they're going to 5x or 10x over the next 5 years? Probably not. I don't see Google 5xing or 10xing in the next 5 years, nor do I see that happening with Adobe. I think there'll be great returns. I think both those stocks will severely outperform the stock market. But are they that 5x or 10x opportunity? I'm not so sure about that. If you want to talk about a company that at least has a chance, a realistic chance to be that is already a big tech company, look no further than AMD. AMD is really a company, when you see where this company's revenues will be going over this next 5 years and their earnings per share, I think that's one of the very few big tech companies that you can look at and be like, dang, they might actually have a shot to 5x or 10x that stock over the next 5 years and what Lisa Su's going to do there. So, I think there's just not a lot of people respecting AMD right now. And it's going to be funny. What's interesting is once everybody catches on, it's going to be an absolute pile up to get into the stock. And just my question is that 3 months out, 6 months out, 12 months out, 18 months out? But there'll just be a pile up to get into that one. SoFi Technologies, I bought over $15,000 worth of SoFi Technologies, which is very exciting. Very exciting. Now, you guys know how I feel about SoFi. I truly believe they are one of the most attractive opportunities for becoming a massive financial institution over the next decade, right? Massive financial institution, like one of the big dogs. Now, when it comes to SoFi, I've been talking to them for the longest time about how I want 5,000 shares in the public account. I want 5,000 shares. And I kept kind of pushing it off. I finally said, you know what, let's freaking do this. And I've got myself to the 5,000 shares. And so I did it finally. And now I feel good with where I'm at with SoFi. Like, I feel good. I feel like I don't need to buy any more shares. Not to say I won't, but I don't feel like I need to. Because I own 3,700 shares for the longest time in the public account. And I always felt like, come on, man, like I got to get to 5,000. I finally just said, screw this, man, I'm doing it. Like, and if SoFi becomes a financial giant over this next decade, like I think they're going to become, like, I'm going to look back and be like, oh my gosh, remember when I was buying SoFi shares at $10, $9, $8? Like, it's just going to be crazy, right? So that's SoFi. Now, what about Patreon? So the Patreon portfolio, the smaller portfolio, right? I bought some stocks in this one. Some of them are similar, some of them are different. Now, keep in mind, if you ever want to join my Patreon, it's always linked in the description area down there. It's the second link, right underneath my private stock group and 1000X application. Right there, if you want to support my content, see the stocks I'm buying and selling each week, you go ahead and join my Patreon there, okay? Also, by the way, my Instagram and X is linked in the description area as well. So, Patreon. And by the way, I care so much about this portfolio. You might think I don't care about it because it has $33,000. I care so much about this portfolio. It's so fun to me. It's like back in the day, I used to play a game called Clash of Clans. I'm not sure if you guys ever heard of that game, but you build up this base to be this like beast base, and that was cool. But then it became more time consuming and like more difficult. And then it was fun to like start a new base. And so I love having the Patreon portfolio. It's a smaller amount of money, but man, I love it. It's fun. So what did I buy? Well, Wynn. Bought some Wynn Resorts. It's just one that I understand all the geopolitical stuff going on right now. No one wants to own a travel company. Okay, whatever. I think they're going to be just fine over the next 10 years. And so Wynn looks extremely attractively priced. I picked up some shares. PayPal. I haven't heard me talking a lot about PayPal. There's actually an exciting announcement today in regards to PayPal's basically stable coin and using it on Coinbase, and some positive developments in regards to that. But PayPal, another just huge moneymaker, huge cash flow company. Alex Kriska seems like everything going in the right direction in regards to PayPal. So yeah, I really like PayPal. ELF bought $625, so a pretty big move in regards to that one. I've been adding to ELF aggressively. Bought some Amazon stock, $724 worth of Amazon stock. And that's crazy. Almost the same exact amount of AMD, right? Because $724.63 of AMD, $724.64 of Amazon. Amazon's really attractively priced right now. I would have bought some Amazon in the public account. I just wanted to focus more on Adobe and Google, right? So this is what the Patreon portfolio is looking like now, right? This portfolio is doing tremendous. And just imagine for a moment when Nike and AMD go on a run. And maybe I'm wrong on AMD, maybe I'm wrong on Nike, maybe they never go on a run and it's bad. I think I'm going to be right in regards to both those stocks. And not only right, but like very, very right. As in like Nike's like triple the price in 3 years, and like AMD's like triple or 5x the price in 3 years, right? I think there's a decent probability of that. And so imagine when those stocks go on their run, imagine where this portfolio is at then. Because those two stocks are holding the portfolio back right now, right? And they're really the only two stocks that are holding the portfolio back, because the only other red position I have in the Patreon portfolio is Wynn, down 3%, down $97. It's literally nothing, right? So those two are holding the portfolio back. So imagine what the returns are going to go to when Nike and AMD go on a run. Like, oh my gosh, it's going to be insane. So that portfolio has been doing tremendous, and I could not be more proud of it. Hey, I want to thank you so much for watching that clip here today. I hope you really enjoyed that one. What you're looking at right now is 1000xstocks.com. 1000x does not just show you a billion different metrics that are completely irrelevant. It's curated, mandatory metrics, advanced metrics, curated for long-term investors, not for traders, so you can understand a company on the highest level possible, how it operates, and most importantly, making judgments on whether you want to invest capital into a company or not. Understanding the upside, the downside with companies. Is that company worth our investments, or shall we keep our hands away? So how you can access 1000xstocks.com is you can go to the description area of this video, or you can go to 1000xstocks.com, apply for access to the service. Now you look at the stock and say, why not up more? Like SoFi knocks out of the ballpark, right? PayPal knocks out of the ballpark. Great numbers, great guides, good conference calls. Why are these stocks not up more, right? Like the moves are kind of lame. Well, did you see what happened to Google? Google McDougal last week? Google McDougal had great earnings. Everything was far better than feared, right? And the stock went up, but it hardly went up, right? And that's kind of what we're seeing here with SoFi and PayPal. So why is that? Well, you got to understand the market we're in right now. We're in an extremely fearful market, right? Look at the fear gauges in the month of April. We reached levels on the fear and greed index that were getting very, very close to where we were March 2020 when the worldwide economy was shutting down. People were thinking it was going to be closed for 3 years. If you look at AI investor sentiment, the last 9 week span, you've never seen it this bearish, and they've been doing this survey since the 90s. You've never seen it that bearish for a 9 week span ever. Go back to the great financial crisis, go back to 2020, go back to the tech bubble, go back to the 90s, go back to the 80s. It's ridiculous. So people are scared to buy anything right now. Scared. They're like, I just want to hold down gold. You see gold go up all the time. It's because people are like, I feel more comfortable just having my money in gold right now. I don't want to own stocks right now. I just want to own gold, right? I want to own Bitcoin. I want to own anything. I don't, money market funds, put me in treasuries, but don't put me in the stock market right now, right? So people are scared. And so that's why you don't see these stocks moving up huge. Additionally, remember what's coming tomorrow and the next day. You have Microsoft and Meta reporting after the bell tomorrow, right? Additionally, on Thursday, you have Amazon and Apple reporting after the bell. Those are the big dogs. And those stocks in themselves, those 4 stocks will completely move this market because of how heavy the weights are in the Qs and the S&P 500. So some people are saying, I don't want to step in front of that. Especially when you're in an extreme fearful market. Investors and hedge funds and folks and a lot of these short-term folks, I don't want to step in front of that right now because if all of a sudden, those stocks report bad earnings, bad guidance, bad conference call, whatever, really scared, freaks the market out, the whole market's sinking. Which means SoFi goes down and PayPal goes down, everything goes down, right? And so people right now are in the perspective, it's not a good perspective, but they're in the perspective of, I'd rather those stocks go beast after Microsoft, Meta, Apple, Amazon report, and I'm not part of it, than be in those stocks and they go down a bunch because those earnings weren't it, and they send the Qs down, they send the S&P 500 down, right? And the whole indexes go down because then the Russell falls as well, right? And it's kind of like a cascading effect. It's dominoes. And so that's the way people are at right now. And, I don't agree with it, but it's just, I understand. I understand how these Wall Streeters think. These Wall Streeters are scared right now. And so for them to go, run into SoFi and PayPal today and bid them up 5, 10, 15%, in this environment, they're just waiting. They're like, let me see what happens here, and then maybe I'll feel more comfortable, right? And so that's the market we're in right now. Now, what about my price predictions for each of these? And then we'll talk about if I'm going to be buying or selling any shares in either of these stocks, okay? So, I don't know if you guys follow me on X. I always have it linked in the description area of all my videos. So if you ever want to follow me on X, you can certainly do so. But I posted this on X, a couple hours ago. I said up $26,000 in SoFi. What do you think SoFi will be, in 3 years? I said under $25, $25 to $50, or $50 plus. And from what I noticed is the overwhelming majority thought $25 to $50, right? Some people thought under 25, some people thought 50 plus, but the overwhelming majority are kind of in that 25 to 50 range. Keep in mind the stock right now is like $13. So we're talking about almost a double up from the low range there, right? And then we can call it a 3x plus to the higher range. So do I agree with that? The answer is yes, I do agree with that. I do believe that SoFi, if we're going to fast forward 3 years in the future, will be somewhere between $25 and $50, somewhere in there, right? I think there's going to be, I think, likely at least 1 or 2 major hype cycles that will happen with SoFi in the next 3 years as well. Do keep that in mind. And that could even take it above 50 in the short term. Because I'm looking at the way SoFi numbers are coming through here at this point in time. And so based upon the way I'm seeing those numbers come in, and then if we get into the stock actually start moving up substantially as well, I think you'll probably eventually have a hype cycle that builds in SoFi, and that's going to attract a ridiculous amount of attention to the stock. So, there's a potential that in the next 3 years, at some point in time, the stock goes above 50. But overall, I feel comfortable kind of predicting that it'd be $25 to $50 range 3 years from now. And based upon the way Anthony Noto's run this company, I don't have any reason to disbelieve that, essentially, right? Now, in regards to PayPal, here's the deal, man. Every time I run projections on 1000xstocks.com, when I run my projections, I do my bear case, my base case, my bull case. I have this stock somewhere between $120 and $200 in 3 years from now. So which puts it at basically almost a double up on the low end range, right? And a triple up on the high end range. So like PayPal, the significant upside, like I said, it's not nearly as sexy, exciting as something like a SoFi, but at the end of the day, I think PayPal is going to be a tremendous moneymaker over the next several years here, right? Now, do keep in mind, if you use 1000xstocks.com, we have the advanced projections as well. Now, right? The intermediate projections is one, and I love this one. This one I actually use even more than an advanced projections. This one essentially allows you to do a bull case, a base case, and a bear case all in one place, right? And run your numbers. You can, adjust your revenue growth for companies, net income growth, right? And then it'll kind of spit you out your net income margins, and you can kind of put in your PE ratios, low end, high end, But keep in mind that advanced projections, for some of you guys that want to go crazy with it, you can do revenue, cost of revenue, right? Then you're going to get your gross profit margins. You can adjust operating expenses in terms of percent increase, decrease, right? Other income, other operating expenses, right? Then you're going to get your net income margins. You could also, if you want to dilute shareholder value or subtract shareholder value, if you want to add to shares, so let's say this company has dilute shareholder value and you want to dilute shareholder value by 5% a year, you can do that. Additionally, if let's say there's a company like PayPal that's going to take, let's say 5% of the shares or 10% of the shares off the market each year, you can also do a minus number there as well. So it'll take shares off the market so you can get a more, I guess you can say realistic earnings per share. So if you ever want to do that, you can do that as well. And that backs the numbers up several years, and you can take that all the way out to 2030. In regards to advanced projections. So for you guys that use 1000X, I think you'll enjoy that. And by the way, if you don't have access to 1000xstocks.com and you want to apply for access, go to 1000xstocks.com. And then since you're not a member, click this button over here, apply for access. And you can certainly apply for access to 1000xstocks.com on there. Okay. Alrighty, next up here. Will he be buying or selling shares of PayPal and SoFi? Well, let's think about this for a moment. Okay. So, I expect PayPal stock to be between $120 and $200 3 years from now, right? I expect SoFi to be $25 to $50 range 3 years from now. So, why not buy more? Why not buy more, right? The companies are reporting good numbers. The guidance is good. And this is in these uncertain times. You have the most excuse to bring down numbers, and SoFi could say, it's so uncertain out there, bad times. We're going to bring down our numbers a bunch, right? PayPal could have done the same. And no, if anything, they're guiding higher than expected, than what the experts thought, than what the company thought. So if you're doing that in these uncertain, bad times where everybody's so scared, what's it going to be like when things are feeling good again? What's it going to be like when consumer confidence is good again, right? When the market's feeling good again? That's going to be interesting. And I thought this was perfect for me to take this picture and post that because Supermicro just came out after the bell and their shares are slumping. There's a disaster over there at Supermicro. And so you got a lot of companies that are in disaster mode right now, reporting bad numbers that are missing by a mile, right? Bad guidance. And PayPal and SoFi are not those companies. PayPal and SoFi, if anything, are doing much better than anticipated, much better than expected, right? That speaks volumes. Now, that does not mean I can go too heavy in these stocks, right? Because I have to watch position sizing on both these. At the end of the day, SoFi is somewhat of a bank, right? Obviously, huge fee-based revenue, but still, it's kind of in the banking space. So there's risk there, right? PayPal has risk as well. So it's not like I could go crazy heavy in SoFi and PayPal. But at the end of the day, it makes sense to buy it more. But do keep in mind, you got to stay diversified in this game. One of the reasons I'm able to get through these bear markets, through these nasty markets, is I don't go all in one stock, right? 2 stocks, something like that. You always see me stay well diversified. That's how I can make it through what's happened this year, what happened in 2022, what happened in 2020, right? What happened in that end of 2018 crash. We were on pace for the worst December since the Great Depression. I can make it through all these markets because I'm able to stay diversified, right? Growth, value, dividend stocks. I don't get too overexposed to a stock where I put myself at some crazy risk. And at the end of the day, there's so many stocks that are going to perform tremendous over the coming years. We're talking about PayPal and SoFi. I'm expecting those stocks to do amazing over the next 3 years. But do you think these are the only 2 stocks in the whole stock market that are going to do amazing over the next 3 years? No, of course not. I give you a long list of stocks that have immense upside over the next 3 years, despite all the drama going around the globe and Trump and tariffs and blah, blah, blah. Despite all that, there's a lot of companies that are going to be doing tremendous, but it's not all of them, right? You have a company like Starbucks report after the bell, right? And they missed their numbers, right? PayPal and SoFi are companies beating their numbers, having good guidances, and that makes me feel very, very good, right? And so at the end of the day, it makes sense to buy more PayPal stock and buy more SoFi stock here, right?